Hey, what's up, everybody? Welcome back. My name is Kepley. I'm with howtoplaystock.com. Today is June 22nd, 2016, and today I wanted to cover the last tool in the umbrella of deferred annuities. That's a fixed index annuity. Okay, if you're not familiar with what I'm talking about here, I've covered in several different videos tools that you can use. They guarantee you a lifetime income. All right. This is the last tool that will do that for you, and I'm basically just going to break it down for you and cover some of the pros and cons to that. So getting started here, guys, with a fixed indexed annuity, all right, what you're doing is you're getting a fixed rate of return and an option, all right, of a return tied to the growth of the stock market index, all right, and as well as a guaranteed lifetime income feature. All right, we'll get in that here in a little bit, and I'll break down some of the advantages and disadvantages to the income feature here that we're talking about. It also provides 100% guarantee of your principal, and you cannot lose your money, okay? It's fixed. That's why they call it a fixed index annuity, is because it's fixed, it's locked in, your return is. You can't lose your principal on this. The deposits remain in your control. All right, so you're not giving up access to your cash. All right, growth is it's also tax deferred, so you don't have to worry about being charged fees while it's growing, or getting broker commission fees added to the tally for when you're growing your retirement income. So that's another good thing there. It also offers potential for higher returns than other safe money investments. Okay, so you do have the potential here to make higher returns than, say, something like CDs or the certificate of deposits and bonds. All right, so that's an also added feature with the income, the guaranteed lifetime income. All right, now I took some notes on this as well that I'm going to break down here for you, because there's just way too much information to really cover in this video, and I'm afraid I might miss something, so I want to basically just read off some notes that I took here on an article that I was reading off of USA Today, and then I also want to explain the option of the return on that index that we were just talking about. So basically we'll start with the option on the return of the index. So, for example, if a fixed index annuity has a participation rate of, say, 50% of the change in the value of the S&P 500 index, and the index returns 10% in a policy year, 5% is credited to the account. And this is according to the IRI, which is the Insured Retirement Institute. Okay, so I'll go ahead and repeat that again for you. If a fixed index annuity has a participation rate of 50% of the change in the value of the S&P 500 index, and the index returns 10% in a policy year, the 5% of that is credited to the account, and that's according to the Insured Retirement Institute. That's not bad. I mean, the other cool thing is, not to mention, you're getting a fixed, locked-in rate of return on top of that. So that's how you're able to basically add more to your returns and get yourself more potential upside than, say, something like the CD or the certificate of deposit and the bonds, like we were just talking about. Now this next part, I'm basically just going to list out some pros and cons to the fixed index annuity. This is information that I got again from USA Today. The article was by Robert Powell, and I'll put a link in the video below here so that you can go to that article and read it if you want, because some of the information here is really interesting, and I could really go on for probably a good half an hour covering all the pros and cons to this type of annuity. But for the sake of saving time here, I'm just going to cover some of the more important stuff that I pulled from the article. So, getting started with the pros and cons, the Insured Retirement Institute, Okay, they say the insurance company is able to purchase index options with the portion of the premium that is not invested at interest to support the minimum guaranteed interest rate. Okay, now if you got more questions about that, again, you can go, click on the link below. I leave a link to the article. You can read it further and get more information, and they'll better explain that for you, how that works. But moving on here, the products are not securities, okay? And when I mean securities, I'm talking about things like ETFs, stocks, bonds, assets that would be in your paper asset class in the stock market. So they're not securities, okay? They're an insurance product. Well, that's what you're getting as an insurance product. And what you want to be careful for in regards to the fixed index annuity is be careful of unregulated sales pitches. All right, that is so often used, and it catches people. And what I'm talking about here is things such as pitches that you might hear where they talk about market upside with no downside. Okay, half of that is true. There is no downside because it's a fixed index annuity, like we were talking about. It's locked in, it's fixed. Now, this information that I'm getting here is coming from Stan Haithcock. He's an advisor in Ponte Verde Beach, Florida. That's Ponte Verde Beach, Florida. And he's an author of The Annuity Stanifesto. Okay, so he's the one that's saying this here. And that was in the article from USA Today. Moving forward here, we'll go ahead and talk a little bit more about the pros and cons to the fixed index annuity. You also want to be cautious of being told you will participate in the upside. Okay, so understand that the upside can be limited because of the participation rates and the caps on your returns. All right, there's a call option on an index with very limited gains locked in on the contract anniversary date. Okay, so let's say you signed up for the contract on Christmas. All right, when that full year goes around and it hits Christmas again, the gains will be locked in on that contract at that time, is what they're saying here. The issuing carrier, in most cases, gets to change the rules of the contract at their discretion on how gains are credited. All right, and this is a key factor because often when you're being pitched the contract from the sales agent, that information is not disclosed. Okay, and after reading this article, I'm going to go in and make another video, an extra video at the end of this video package I'm putting together for annuities. I'm going to make a video on fixed index annuities and questions you can specifically ask the sales agents so you know what you're getting into. Okay, because it sounds like from all the information I'm gathering here, it sounds like some of these sales agents get really high commissions when they sell these annuities because they're so popular, and because of that, you can get into something that you don't really understand, and you may end up it may not be the best option for you. So just something to remember there. Most fixed index annuities are sold today with what's called an attached income rider. Now this is part of that income feature that I was talking about, and that is a separate calculation that can only be used for income. You can't peel off the interest, transfer, or get a lump sum of the income rider total. This is where the agent games are being played, basically, is what they're saying. People think that they own a 7 or 8% annuity, and they don't. What they own is an income rider that can be used for a lifetime income stream. All right? So basically, to sum it up for you guys here, the fixed income annuity, it's basically a tool for people looking for protection on their principal. All right, so if you don't want to lose your money, again, it's a good tool to use for that. And you better be okay with basically CD type returns and an efficient delivery system for income rider guarantees for future income needs. Okay. So that's basically what I was able to cover and get out of the article from USA Today. And I apologize for looking down so much and having to read that to you, but I didn't want to miss any of that, and I felt like if I didn't have that in front of me, I was going to miss something. Okay. Again, I'm going to make another video here soon, and I'm going to cover questions that you can ask on the fixed index annuity, and these are questions that you can direct towards the sales agents so you know exactly what you're getting into. I'll leave a link again and below in the video here that you can check out on the article that I read. I'm also going to release a video here soon on the Forex market, and I'm going to break down risk management and how to handle your trades when you're dealing with Forex currency markets. Because like I've told you in several videos before, I have about, I don't know, probably a good 10 to 11 months of experience in the Forex market. I had a 92% win rate. I won out of 50 trades, I won 47 of those, doing, planning my trades out with the Forex. So I'm going to cover that in another video as well. So stay tuned for that, because that's going to be really cool. I'm going to cover things like trailing stop loss. Okay, I'm going to cover things like the amount of money that you actually need to set aside for each trade, so that you can reduce your risk of losing all your money. All right, so you'll know when I release that video, because it's some good information in there. Other than that, guys, that is it with the annuities. This is the last tool again that you can use under the umbrella of deferred annuities. If you have any questions or concerns, you can also check out my websites. I'll leave links in each corner here for those websites, so that you can go out and look at more information that I might have on whatever it is that you're interested in when it comes to trading, stocks, day trading, investing, the Forex markets. But that is all I have for today. Go ahead, if you found this video beneficial to you, go ahead and share and like the video. Get it out to as many people as you know, because again, at the end of the day, like I've said before, it's about being patient and just taking your time, getting your plan together. All right, so remember that. Be patient. Okay. That's all I have for today. Again, you're watching today's Investors Investing Tips for HowToPlayStock.com. My name is Casey Kepley, and remember, income's the outcome, guys.